Welcome out to our show here today, Tackle Trading's Halftime Report, our daily show where we go through the markets a step at a time, analyze the charts, analyze the news, give you guys context, give you guys insight, word of the day right there, as we break it all down here as coaches at Tackle Trading. Welcome out to our crew. If you're a veteran of our channel, you know the drill. You know what I'm going to ask right now. Hashtag Team Tackle right in the chat. Great way to always start the show with positivity, energy, and just a reminder, we are here as a team. I love that. If you're brand new to the channel, as you're coming in for the very first time, click subscribe, click the bell. We do this show each and every day. The markets are live. We go live at 12:30 Eastern Standard Time. Now, we've got a full crew here today, an exciting show planned for you. Markets are kind of doing what they're doing. We'll break all that down. But I'm just excited to hang out with these guys and talk markets with you guys as well. Got Coach Tyler Craig 2 days in a row running screens, doing technical analysis for us. How you doing, Tyler?
It's a winning streak, Tim. It's a winning streak. It might be a 2-day winning streak, but
3 is a streak, Tyler. Not 2, not 1. 3 is a streak.
Hey, 2 is a streak for me, buddy. I define it. 2 is a streak for me. Frank will probably dethrone me tomorrow, but
you're on an island with that. Major League taught us 3 is a streak, and ever since then it's 3.
This is my Major League, boys. Just move on, Tim.
Statistics.
We all live in Tyler's head right now.
Statistics needs 3. It's not 2.
It's Tyler's world, and we're all living in it right now. I like that attitude as well. A little bit of a bravado there. Matty, how you doing today, sir?
Doing good, Tim. Excited to be here with the crew to break down the market activity on a daily basis, and overall just hang out with the Team Tackle every day.
And then we have the beloved, the trader extraordinaire, Mark Justice, back here as always. Marky, how you doing, sir?
Wait a sec.
Wait a sec. There's something fishy about this. A lot. Like
whoa. Did you say beloved?
Beloved, yeah.
Okay.
Listen.
He likes having this grumpy persona and all that kind of stuff, but everybody, they know Mark's a teddy bear. They love him. He is beloved. Absolutely beloved.
I say that's a creative word choice. That's all I'm saying.
I don't trust anything I'm hearing right now.
You should have. The first thought I had is, what does Tim want from Mark?
Yeah, seriously, right? Like this is very fishy.
Yeah.
Very
Can you watch my kids later? No, not trying to get anything. Not trying to.
We're under freaking quarantine over here. If you want to save your kids, that tells you how much you love your kids.
That'd be a bad parenting choice. All right, guys, let's break down the markets today. Obviously, we've got technicals developing still as well. We're still in the uptrend, holding that kind of light news week. Some of the same themes are starting to develop. We had news out of the ECB today about more stimulus. I'll have Matt kind of analyze that. We have IPOs happening. Do we have an Airbnb chart yet, by the way? I know that the pricing is kind of coming in here this morning. Airbnb still kind of coming in. Dash yesterday, though, we did see that one. So it's kind of been an
week. I think like Dash, the chart literally showed up when we were doing the halftime report,
like in the middle,
or right before. Because I checked like at 10 o'clock, I couldn't get a chart on it yesterday. So hopefully Airbnb comes in. I don't have one yet though. I got just the death circle of, charting.
Sure. And let's talk about those IPOs in the context of what we're talking about with the market here. First, though, Tyler, give me a read on the chart from the S&P, starting at the top.
Oh man, I'm falling asleep here, Timmy. On the day, basically unchanged. I think though, you've got to be pleased by the response to yesterday. Yesterday was kind of nasty. We gapped lower this morning and they buy it up. So particularly when you look at small caps and tech, look, if you were worried that yesterday's nasty downtrend would be the beginning of some multi-day big pullback, I think this morning lays those fears to rest.
No,
Mark,
and look at that clean bounce off the old breakout level. Like this is one of the things I talked about in the weekend prep class for pro members on Sunday. And if you are not part of this wonderful community, go to the store tab, sign up for a 15-day free trial today. I talked about, I thought that this was an A+ cash flow environment. I've been using that phrase on the weekend show for the last 3 weeks. And one of the reasons for that is the lack of a bearish theme. Like there's not the election theme, there's not COVID, there's not trade war. These themes we've seen over the last 3 years. Not really a bearish theme other than valuation being nosebleed, which is never a theme, right? It's just a reality. And then couple that with the layers of technical support that price could catch on if price started to decline. And we're seeing that happen today, that old breakout level, old resistance becoming new support. We got a variety of rising moving averages. So you got a lot of things to catch price, and we're seeing that happen today.
Matt, how are you reading market action this week? Obviously, we got a lot of the same storylines that are continually and in development and whatnot. What's your read on the price action here?
I mean, we were a little bit of a range up coming into the market. Tyler broke that down yesterday when you were looking at the NASDAQ. NASDAQ up 10 days in a row, kind of getting range up there. S&P, depending on how you kind of identify the pivot and the base, you're up anywhere between, before yesterday, obviously, you were up a good healthy amount coming from 3550 all the way to 3700. So a nice 150 point movement on the S&P from the last time it tested that 9 EMA. So I think you're a little bit of range up, and when you range up, you're expecting some type of consolidation and or some type of flag or some type of retracement. And as of right now, I know kind of the early selling we had in the futures market, but from the cash open here in the S&P 500, you're really looking at this as either a flag pattern or you're looking at this as a high base. And whether or not you see it as a flag or a base is important, because on a flag you're looking at dip mechanics, and on a base you're looking at breakout mechanics. Because of that, I'm looking at this as a high base, and I'm still looking at this at 3700 as ultimate confirmation, which would be 370 on SPY, the ETF. So I got this as a bullish uptrend, slowing momentum, consolidation towards the top end of the channel, which typically means be a little bit more patient, wait for that ultimate confirmation above 3700, i.e. 370 there on the S&P, and then we should have that next leg up. And that would be waves. Well, technically in the short-term trend, that would be kind of going into that wave 5, but you can't expect another leg up here, in my opinion.
Tyler, can you flash through all the different indexes? Just tell me if you've seen anything from a relative strength or weakness perspective. Run the technicals. Then I want to talk about some of the major themes and stories in the market. So come back to the S&P at the end of it, but flash through all the indexes. Then we'll have a chat about the news. Okay.
Yeah, we'll start with the NASDAQ. I mean, the S&P is unchanged. And so from a relative strength, relative weakness perspective, anything that's in the green today is essentially relative strength. Anything in the red is going to be relative weakness. That makes it a pretty easy contrast. Tech up 0.3%. That is outperforming the S&P, which I think is interesting because yesterday tech was what was weighing everything down. So nice to see them come in and defend this old resistance level. To Mark's point earlier, old resistance becoming new support. That's textbook, and it's what you see in the strongest of uptrends. Weak uptrends, you'll often come back down and test old support zones. Strong uptrends, once you test an old prior pivot high, bulls swarm and turn it into support. I like the hold of the 20-day moving average. Like I said earlier, I think if you came in today fearful of this being a bigger drop, so far at least, bulls are swarming. So I like the pop back here in tech, and you might be seeing some decent pullback opportunities in the tech sector here. I think today's low, assuming we close in the green or higher, I think today's low is going to be a nice little short-term support zone to use as a reference point. If this bounce fails and we take out today's lows, we take out the 20 MA, the short-term trend turns more messy. But I say so far so good this morning as far as the NASDAQ's concerned.
Isn't this kind of what you want to see on the NASDAQ, Tyler? I mean, you got the breakout from last week. You're breaking out of a major level of resistance right there at that $300 mark, 298 on the NASDAQ. We know the multiple ranges of resistance when we're looking at the NQ contract, but it shouldn't surprise anybody with the market retesting a very major breakout channel.
No, I think yesterday was a little spooky because of the volume, right? It's like, okay, big distribution day. Will it hold? Is this the beginning of something bigger? But I remember saying this yesterday, we referenced this prior pullback to where it's not like this is the first time you've seen something like this. And incidentally and coincidentally, the old pullback or the previous one held the 20 MA, this one doing the same. So I think it's simply proving that yesterday could be just a one-off shaking of the trees, taking out some of the froth in the market, but dip buyers are still alive and well here for sure.
Well, I mean, very quickly, Mark, you think about those dip buyers very quickly. Look at the S&P here today. Test down on the futures market, gets gobbled right back up, and now it's basically doji. Look at the NASDAQ, down on the day, gap down on the market, selling off in the futures, a continuation of what we saw yesterday. He comes right back into historical resistance levels, new support right there in between the rising 9 and the rising 20, and it finds buyers there. And so you look at the relative strength and you say, yeah, you kind of like the NASDAQ here, but you got to be a little impressed with the overall market as a whole, given the fact that we did see some fairly aggressive selling for the market, especially in recent history, with increasing volume. And probably the increasing volume more than the volatility was the concern yesterday. You saw that concern spill over into the futures market on the overnight action, finding support earlier here today, right where those support levels are forming. You got to be a little impressed. And again, the market might be lacking some type of momentum based analysis, but I still think this market is a buyer's market, and I think the data supports that earlier today.
Mm-hmm.
Yeah,
Mark,
and you guys analyze from the upside, and obviously nothing to add is textbook. But I spend most of my time, because I'm a cash flow trader, do mostly naked puts, analyzing to the downside. So we got all this upside potential still, which for naked puts clears them out. But we go to a weekly chart. Let's say this resistance level gives out, right? And this is what I always look at. It's like, where are the next things can catch? And we have like rising moving averages. I mean, we see like some of the pullbacks to that 20 weekly, which I think is the most underrated indicator in technical analysis. And so even if like this little gives up, we got a rising 9 trend indicator, we got that massive rising 20. And so like when I look, we got all the upsides that, right, things might just return to normal, trend continue. That's great from a cash flow perspective. But if things get a little messy for whatever reason in the short term, we got stuff that can act as support, that can help provide a bounce that we've seen many times in uptrends before. So absent a bearish theme emerging, and you never know, right? Something could happen out of blue next Thursday for all we know.
Yeah, but those bearish
But
themes
we can't,
so
we don't
beat up.
Yeah, we don't trade around what might happen. If you trade around what might happen, then you never place anything. We don't have a clear bearish theme. We got rising support levels. We got upside signals. I mean, it's just an A+ has been for 3 weeks, 4 weeks, cash flow environment with upside potential.
Mm-hmm. Mark, what's the latest on stimulus conversation? I saw that the House passed some measure to get 1 week of an extension for, the government funding, so they don't have a shutdown. I know conversations
Before
are
you
ongoing there.
transition to House and that talk, Tim, I do have something to say regarding the technical conversation.
Oh, sure.
If you'll go back to the weekly chart very quickly there, Tyler. Come back down to a 15-minute chart very quickly. When you're looking at the last 24 hours and you're seeing the increasing volatility, the increasing volume, the headlines were kind of nasty, obviously, as well. And, the market's only down 1%. I mean, nothing to really kind of care about. It hasn't even broken any major support levels. But when you're looking at that on that 30-minute chart, it's down, it's down, it's down, it's down, it's down, it's down, it's down. And you get a little spooked sometimes when you see that from an intraday perspective. And sometimes when you get so fixated on the intraday analysis, it kind of clouds your judgment on what's actually transpiring from a bigger macro perspective. When you guys, and I've looked at that weekly chart every day for a very long time, but when I was fixated on analyzing the intraday chart just barely, and then when you guys went to that weekly chart, when Mark, you were talking about the 20 weekly moving average being very underrated, that picture is so clean for price appreciation. That technical picture on that weekly chart, I don't know how you come to any other conclusion than price appreciation here.
Unless there's an event.
No. I'm just talking technical analysis.
Yeah, no,
we know technical analysis is probability factors. It's not certainties, right? You have those uncertain events, those landmines, those events that could occur at any one moment to drive price to the downside. We know that. But from a pure technical perspective, doesn't this chart scream buy?
Well, it screams cash flow to me for sure. I mean, but that's who I am. So yes, I've been more aggressive than I have been in a while for the last month. And
what about you, Tyler?
I mean, yes. I don't have any shorts. I'm long and strong, hoping this pullback doesn't get too deep. But no, I agree. The big picture, it's impossible to be bearish.
Yeah, I agree.
Long and strong.
I like it. I like it. It's
that.
as usual, it's the
Hey,
tweet of the day.
listen, I mean, I am not opposed to somebody always having, this mindset that we're trying to find where the risk is, all that kind of stuff. But what you're seeing is you got to trade with the information in front of you. There's no question about it. The market's bullish. The market is healthy. Even this little hesitation last couple of days, those are actually kind of nice. I mean, like, I love what Tyler said yesterday. What did we think? We were going to get like 25 bars in a row without one red bar, without one single day down. So I think it's all healthy, constructive, and I've been approaching it bullish, and I'm putting more bullish stuff on this week. Yeah.
Yeah, the only difference, because Tyler and I are perpetual bulls, right? And the only difference is I want a deeper pullback. So that's the only difference.
Shock of the day. Mark wants deeper prices
Golly.
so he can get a discount. Nothing wrong with that, bro. I mean, listen,
And there isn't, but I mean, Mark is right. Mark and Tyler are the two perma bulls for us to tackle. Tyler will go bearish, obviously, to offset and hedge and short-term trade to the downside, but from a longer-term perspective. But have you ever seen a more perma bull that wants perma bearish action in the market?
Listen, it's a conflicting emotion.
It's like you got some weird moments in your 24-hour mind.
No, because I want a pullback, but then I want it to stop just in the baby bear spot. So
You want Goldilocks analysis. I get it. I like it.
Yeah. Real quick, Marky, on the stimulus conversation, Matt, Mark, either one of you. Let's start with Mark.
Only headline I got.
What are the latest?
The only headline I got is Pelosi saying bipartisan COVID relief talks making great progress. Where have you seen that headline before? So that is all I have on new information. I don't know what you guys have covered.
Bipartisan talks.
Making great progress. Hey, remember, hey, listen, we had a 3-week rally at the end of September, early October on that making progress theme. So making progress.
So, ongoing conversations, making progress.
Yeah, I don't want them ever to pass the bill. I just want them to always be making progress because, once they pass the bill, then the algos have no new news feeds to feed off of. So.
Yeah. I saw that. I also saw that they are, they did pass that resolution out of the House and they're continuing to move that forward. They still got to get the Senate to pass it so they don't have a government shutdown on Saturday. Probably obviously will do that, but they're centering these conversations around that. Matt,
they're passing a bill to extend the deadline on
is that what that is?
Yeah, they passed it today. They passed it to give the stimulus conversations a little bit more time. The next bill will further push out the budgetary problems into 2020, 2021, which is par for the course. That's what we always do. But this one is a short-term spending bill simply to give Congress a little bit more time before the holiday season to see if they can get a bipartisan deal done over the next week or so.
Got it. Let's flash through the top-down analysis part of the markets. I do want to get into some individual stock news, the IPO stuff. I think the most interesting things today actually are some of the individual news stories we saw out of Facebook and some of the IPOs, as well as GE. We'll talk GE a little bit later. Tyler, can you walk me through crude oil first? I got a little breakout. We were talking about this yesterday. Matt actually did get this candle to kick right above those tails and those bodies up there on crude oil. Tyler, what's your chart reading here for you?
Same as yesterday. Energy is the strongest sector, I believe, today. It looks good. It looks pretty. I mean, we talked about this little ascending triangle yesterday. Subtle higher lows showing that buyers or demand was building beneath the surface. Nice relative strength today too. I mean, stocks are kind of shrugging and crude oil is running. It's still early in the day. I mean, we'll see if it closes above resistance, but I say this is nothing new. Crude oil has been constructive really for the last month. And so you have been getting paid in oil, like we said yesterday, to buy dips and buy breakouts, and that continues to be the fact.
Listen to Tyler with all the sayings, long and strong, stocks are shrugging, but oil is running. I mean, he came, fired up with some sayings today, didn't he?
I came to play, boys. I came to play.
Matt, constructive price action here. Obviously, we talked about this one over the last couple of weeks as it's been developing, and here we are. And XLE and the energy stocks are obviously following along suit. Any thoughts on crude oil, Matt?
No, I mean the price action certainly has been constructive. We've talked about it being constructive and becoming more constructive, really, kind of ever since fairly quick after the election there in the mid-November, but we've also all been very hesitant on it. And, you know, we've had discussions literally this week in the halftime report about crude oil and how it's becoming consistent and how the nine's starting to really kind of act as a support level. And what do we see over the last 2 days? Kiss off the 9, find a breakout, and yeah, it hasn't confirmed because we got to go through out the rest of the day. You know, fading action a little bit over the course of the last little bit, but you know, more than likely, this is going to technically confirm here and thus maintain that consistent look and feel that crude oil has had. And most likely, we're talking crude next week in the $49 to $50 range. Brent crude went above $50 for the first time in months and months and months and months and months and months, just here today as well. So I'm still personally hesitant, though. From a directional perspective, I'm still hesitant. And again, it takes a while to get over that. The consistency was there from the breakout of 42 on, but I'm still not there. Psychologically, I'm still not there with crude.
Mm-hmm. Mark,
You had an alpha 9 pattern on the crude oil chart. Put on that 9 EMA, and I saw you mocking my 9 yesterday, Tyler. You don't think I watch the halftime report even when I'm not here? Yeah, put on Mark's girlfriend, right? Yeah, alpha 9 pattern on oil. That alpha 9 pattern.
I didn't think there was mocking. He literally has a setting in his Thinkorswim that says Mark's GF.
No,
there might have been slight mocking.
I was paying homage, Tim.
It was ageism.
There you go.
All you know is you had an alpha, the alpha 9 pattern in this market in 2020, in 2019, 2018. You go back and study the alpha 9 pattern with a high base, short-term uptrend, high base, rising 9. It's a money pattern that I actually use for day trading a lot, but it's applicable for swing trading, and it's a powerful pattern.
I'm not giving a snapback, bull flag, cup and handle, kiss off the 9, the alpha 9. The alpha 9 is a high base with trend momentum. The 9 catches up, you got to break out. That's the pattern.
Nice breakout too.
It's a nice breakout.
I like it.
But okay, you like it. Everybody likes it. Who's taking action here?
Well, outside of energy stocks,
like energy. Yeah. Okay, so are we all still doing that then? We're playing energy stocks and
I added exposure to energy stocks on the oil breakout today.
Okay, so but that's my point. We're like most coaches at tackle trading are trying to take advantage of the energy movement, and crude's just secondary analysis to the energy play.
Mm-hmm.
Correct.
Yep.
And my question is that the same thing you guys are doing, even with crude being as constructive as it has? So Mark, you added energy plays. Tim,
I didn't add one. I haven't added one yet this morning, but I actually did do some scanning in energy just for this. Like, look at Phillips 66 here, Tyler, which is a tackle 25 stock. It's one that we really like the fundamentals on.
Nice little breakout play there
on my watch list. So this one I might trade today. I actually have it all dialed up, and I'm building a trading plan for it. So
kind of waiting for confirmation.
The breakout on crude oil for me gives me more confidence to go look for breakout momentum plays in the sector. Yeah.
And Tyler, I'm assuming that is you as well. You're looking not specifically at crude, but trying to take advantage of the same thing crude is which is what's happening specifically in energy, correct?
Well, but the reason is maybe slightly different than the way you're positioning it. The reason is because it's like, well, what product would you use to trade crude oil? I don't trade futures. I don't trade futures anyways, so it's not like I'm going to buy CL. USO sucks, so I'm not going to use USO. So it's like, hey, you give me a product that walks like CL and talks like CL but doesn't have the leverage of CL, I'd be happy to play it. In the absence of that, XLE, so POAH energy stocks is your go-to.
Yeah, I'm so happy you started USO with it sucks. So what are we going to do so that we don't have to debate USO? I'm so glad that's the standard we set here. But I'm with you there. Like, I think it's tough to play crude because you don't have an alternative to you don't have a one-to-one product that is alternative to the crude in the futures market that is actually accurate like USO used to be. And I think that's one of the reasons why most people at Tackler are gravitating towards the actual energy play instead of the crude play here. Just wanted to have a conversation on it more than anything.
Long and strong should be a t-shirt, by the way.
Long and strong.
Long and strong.
It's on Twitter. We're doing it.
Absolutely.
Like literally, that is one of the t-shirts we will have. I loved it. Tyler, bringing the heat here today, bud.
Absolutely. Give me a look at gold, then the dollar, then Bitcoin. Then I want to talk companies. So let's, if anybody has extra insight here today, we can hear it. But Maddie, I'm just seeing a little hesitation on these moving averages, kind of same analysis we've had. What are you seeing?
Are we talking
Gold first.
on gold? Yeah, and I mean nothing really here to say on gold. You cannot have a gold discussion without having a currency discussion, though. And you know, obviously, we did have some news coming out of the ECB over the last few hours. The ECB is going to be extending their quantitative easing program by an additional 6 months to fit the entire 2021 calendar year. They're also increasing $500 billion in new freshly printed European currency there. That's about 600 billion US dollars worth of new stimulus. And what is amazing, guys, and I'm dead serious here, but this is indicative of everything I've been talking about with currency. It's very simply this. Take a look at the euro dollar here for a second, guys. And I'm going to ask Tackle Trading this. When you increase supply, okay, everybody, when you increase supply of anything, what typically happens if you're not talking Tesla stock?
It goes down.
It goes down, right?
Yep.
That's how price works, right? You increase supply, price goes down, decrease supply, price goes up. Well, here's the Europeans today. Christine Lagarde last week says, we're out of ammunition. We're out of ammunition. Today, here's $500 billion, okay? Somehow, their ammunition, they realized it was just paper, and they didn't run out of the paper. So they're still good. So they put out $500 billion. Now, you would think if we increase the monetary supply by $500 billion, the value of their currency would go down. But what happened to the euro today? On the announcement, the euro went up because they're not even close to doing what we do in the US. This is the race to the bottom I've been talking about. This is the currency war that we have been going through for 10 years. This is not normal price action in the financial world. This is Looney Tune analysis at this point when it comes to currencies and the amount of stimulus. And I'm going to tell you guys something right now. You look at what happened to the euro today. It went up with a $500 billion injection of freshly minted liquidity. What do you think happens to the equity markets from around the world if you pull off stimulus from that conversation?
If you pull the rug of stimulus out for the globe, the equity markets would fall for sure.
Okay, so if you pull that rug out 6 months from now, what is the equity markets from around the world? I'll wait for every one of you to answer. What will the equity markets from around the world do?
They'd be down.
If you pulled the rug 6 months from now. Okay, if they pull it a year from now, what are the equity markets going to do? If they pull it 2 years, 5 years, 10 years from now, what are the equity markets going to do? Spectacular crashes.
I mean, go look at the crash in October.
Hold on, let me finish my point. Can we, if you pull the liquidity from the market, markets go down. We know that.
Mm-hmm.
We know that the euro went up with $500 billion. Does anybody think, however you want to describe as them, the elite that really run these circles, you really think they're going to want to see these markets go down? You really think governments around the world are going to want to see their economies tank? Do you really think the euro's out of ammunition when last week they said they were out of ammunition and this week they found $500 billion or 500 billion euros? My point is this. Never, ever, ever overreact to short-term price action in the gold market when the entire world has lost their bloody mind. Own gold and thank me later.
Mm-hmm. And this update today just is a head scratcher. There's no doubt about
No,
it.
I just wanted a moment to
It's-
talk about the Europeans and putting $500 billion out there.
It's.
I appreciate the extended dollar conversation. I was able to get.
I
into it a
figured
little
you
bit.
did, Mark.
I wondered
figured.
where you went. Yeah, I wondered where you went.
Mark
What's
was
the
like,
only-
Matt, I'm so fascinated in your currency conversations. Continue, please.
Hey Matt, I'll keep the currency conversation going. Look
Thank
at the Aussie dollar cross pair, because with
I got
with exactly that you just said on owning gold, the Aussie being one of the stronger currencies backed in gold, we see
I don't know what you're. I don't. Tell me what.
that one, AUD
Second one on the
AUD
list.
slash
USD.
USD.
That one.
See,
Look at that. That's showing that everything that Matt was just talking about is, with the craziness that we're seeing within the stimulus and the QE and all the crazy things that are coming out, you see the Aussie do this type of move in a day, which was also a big break that we've been looking at for quite some time now. And the reason why is because the Aussie is heavily backed in their gold mining production.
well, and talking about the other, oil back, gold back currencies out there, take a look at the US dollar CAD pair here today. The US dollar's been in that bearish downtrend pain. Look at the cleanliness of that low base breakdown on the CAD, which has a nice little kicker called oil and gold based on economic analysis, right, Cody? So, I mean, and the fascinating thing is you're not seeing it in specifically gold right now, but you're seeing instruments that are tied to gold start to really kind of lead that charge. And again, currency traders are going to be all over this right now. Cody, you're all over this right now. But what we're seeing in the currency market, I've been saying this for a week and a half now in the halftime report, when you're breaking down the gold chart, it starts with the currency market right now. It doesn't start with actually analyzing gold. And what you're seeing in the currency charts across the board right now are in my opinion, a fairly aggressive boom for gold in a little bit longer term time frame.
Mm-hmm. And looking at that dollar CAD crossbear, by the way, I think one thing that just does stand out to me is just the consistency of it. And also when you're reading a currency pair, guys, means weak US dollar, very strong for the CAD. When Matt referenced the oil, implication, the tie to Canada, that's one of their major commodities they export. So that strength in crude, it all kind of ties together. That's why we do top down analysis. Matt, and that European news, that is still a head scratcher, but you're right though. If at any point in the future, we don't have that liquidity, the market needs it. Market wants it, market expects it. There are a bunch of babies about it
just
too.
remember that when anybody's like, oh, they're never going to do another stimulus. Oh, the feds are done. They're never done. Are you kidding me?
Yeah, it's not a matter of if or when, it's a matter of how much. Like it's going to happen. There's going to be more stimulus. There's
they're
going to be
done
more
for
stimulus.
today.
Yeah,
they could be done for today, but they're not done for tomorrow.
Mm-hmm.
I mean, they got to wake up and make
or
that
next year or next decade.
Listen, the economists at the Fed making an average of $325,000 need to do something to make that coin.
Absolutely. They got it justified. By the way, there's not much in the Bitcoin chart today. You can peek at it, Tyler. Just give me one quick peek. Tell me if you see anything. A red candle, same kind of pattern, same kind of.
When you have inside bars, when you have a candle that's in the prior day's candle, there's really nothing to see.
Mark, any updates from you? This is a product that you've been focused on lately. What are your thoughts on Bitcoin?
Well, just when you get overextended from the weekly moving averages, I mean, it is very, very normal. Go look at historically at a billion charts. I don't care, equities, copper, oil, gold, whatever. When you get overextended, it's very, very common for a consolidation or a pullback. Let that overextended nature ease off. Still bullish long term. It's just you could see some short-term volatility as, I mean, it's a huge run. Things just don't go up 40% in a couple, in a month without having a cooling off period.
Mm-hmm, mm-hmm. Do we have an Airbnb chart yet? I keep trying to pull one. I'm
not
anxious to see
seeing
where it's
one.
pricing. I want to take a peek. It's not pulling up here yet. All right, we'll keep watching that and see if we can come back to it a little bit later. But they are IPOing today, obviously pricing. Mark, do we know where the pricing range is, by the way?
It is currently, it was like the IPO was expected to be in the 42 billion, like 55, 58, 62 range. it's going to probably start at like 140 from what I'm looking at right now. So yeah, that's a full show of commentary right there.
Give me DoorDash then. I do want to talk about it because we're dealing with a couple of them this week. We got Roblox tomorrow. We'll get the chart on Airbnb at some point. I mean, guys, this just has to be discussed a little bit with our community here, Matt. We're seeing just radical IPOs coming out these last couple of days. If Airbnb was targeting something around a $60 price tag, they come out at 140. You're now paying extreme premium based on the retailers are coming in and all that kind of stuff.
Come on. Airbnb's the next Apple. Get it on. Get that thing to 2 trillion. Let's rock.
Just rock and roll up the chart, huh?
Who cares we're in a pandemic and nobody's actually using their product? Who cares? CEO says it's a good product. Let's rock. 2 trillion. Let's go. Everybody buy. Mark, open up that risk graph. Unleash the crack. No, of course, it's insanity, Tim. It's absolutely insanity. See what DoorDash did yesterday. See what Airbnb is doing here today. It honestly is an indication of what's been happening in 2020. And I do believe that if, I believe Airbnb was thinking about IPO earlier this year. Mm-hmm. And I remember talking about it literally in the halftime report. And like, there is that. And this was like, the market had just started recovering. It was like April-ish. The pain, it wasn't over. Everybody was scared out of their mind. And I remember being like, this is the dumbest time ever to IPO. What are we doing? We're going through a massive pandemic. Nobody knows what the future holds. Like, everybody was concerned. And now, after 8 months of witnessing what is happening in the market in that 8 months, I don't know if there's ever been a better time to take advantage of consumers than right now with what DoorDash and Airbnb are doing.
Mm-hmm. It's obvious what they're doing, right? I mean,
no, and I saw some disgusting commentary on CNBC yesterday. They were talking about how prices get jacked up, and then they were saying, well, yeah, but even after they get jacked up, they're up, 20% even after the high prices in 2020. No, and then they're like, well, so for people looking to outperform the market, and I'm like, wow. I mean, seriously, like, this market has no fear. At some point is going to get slapped in the face hard.
Like, honestly, I think CNBC at this point thinks all their viewership is people that are just, speculating, trading aggressive companies and have zero education, which means they're like, yeah, I bought DoorDash yesterday and made 120%. When they're like, no, you didn't. You lost money. What are you talking about? You weren't the venture capitalists that got in and pre-IPO money. But it's sad sometimes what I see on CNBC.
And I've seen this out of CNBC a lot this year, where they've really shifted to try to appease a, I hate to use the term Robin Hood trader, but that.
But they have.
But they have. And so it's like, hey, if you're looking for those big return, I mean, sometimes it feels like more of an infomercial than an actual financial program.
Are you kidding me? I feel like we're watching 20-year-olds on TikTok talking about the markets. There's some programs on there that are really good, and there's some analysts on there that are really good, but in general, it's just the quality of the analysis, and it's not there.
And I can't remember the guy's name. I wish I could give him credit. I really like him. He comes on in the closing bell hour quite often. And he had a comment yesterday that I thought was really, really good. He's like, listen, if all of the, because, it's a down day, so people are spooked or whatever. He's like, listen, if we had a major correction, my advice to you is don't let it affect your lifestyle. And I like that phrase. And we talk about that all the time, is that don't do things that would keep you up at night. Don't be over leveraged. And I liked how he phrased it. It was like, listen, if things went south for whatever reason, don't have it have the impact of affecting your lifestyle.
Yeah, don't go all in on a Roblox IPO just because your kids play it, or don't go all in on an Airbnb because you think it's a cool company, or don't go all in on Dash just because.
Wait a second. I did tell my daughter I was buying her some Roblox shares.
Well, except that it's
and she is very excited for that. She's like, I'm an owner of Roblox. I'm like, yeah, honey, you are an owner of Roblox. You're like, you should have saw her eyes.
Except when it
she
comes out and it has like an $800 billion valuation because everything gets jacked up that day.
I'm just
So,
saying she may be paying her college tuition with Roblox proceeds. That's all I'm saying.
It might be. That company makes so much money. It's crazy. But
I
who knows
I
what
joke,
the
but I
IPO
am
pricing
interested in
is
the
gonna
Roblox
be.
IPO.
Roblox is tomorrow. Obviously, we'll talk about it then.
I think
And
I'm
if it,
unduly influenced by my daughter and how much money she spends on Roblox. And I'm like,
Yeah.
if anybody's like me, we need to own this company, like just to offset the debt explosion that we all pay at Roblox. So I am interested in Roblox a little bit.
Tyler, do you have any companies like that where you invest in them just because you spend a lot of money at their stores, services, whatever it is, and you feel like you've got like some edge there?
I'm boring, man. I don't know
You
that
just
that would
read the
apply to
charts.
me. I own some Verizon. I use Verizon. I mean, there you go. Verizon is the answer.
I don't think
Disney
you own
too.
Verizon for the reason, the same reasons we're talking about, though.
Yeah, that's funny.
Doubt it.
All
Doubt
right,
it.
let's keep
Yeah.
talking stocks here, guys. A couple other stories. I want to talk Facebook here next, if we can. Bring up Facebook and Matt. We know these stories. They come out quite often about different government agencies, whether it's in the U.S. or abroad, going after some of these bigger name companies. I got another one here today. The FTC, along with 46 other U.S. states, are accusing Facebook of abusing its monopoly power in social media, going all the way back to the Instagram acquisition in 2012 and WhatsApp in 2014. They used a phrase, Matt, called buy or bury, which was the approach they were accusing the company of issuing in. Doji here today, market reaction in the short term is nothing. Matt, what was your read on this news story?
You know, Tim, for a very, very long time, I've said this is a nothing burger. For a very, very long time, I've held the opinion that it does not matter what the federal regulators do because they will always regulate past behavior and never truly understand what Facebook does as a company until last night. And I didn't read all of the FTC lawsuit. I didn't even read the 46 state lawsuit, but I'm fairly familiar with those talking points because they're all over politics. But it was, I'm not kidding, guys, it was astonishing to see the level of detail in that FTC lawsuit. They're all over Facebook right now, guys, and to a level that is probably bigger than what we have been anticipating. And I do think this is a little bit, let me put it like this. I am a little bit more concerned now than I have been in the past about how this could impact Facebook and from a stock perspective. They're looking very aggressively at the acquisitions of Instagram in 2012 and later on in WhatsApp. And their argument is how Facebook aggressively went at contracting the competition in their space with a quote, buy or bury mentality, right? Buy or bury mentality. And how Facebook wanted to aggressively eliminate the competition. And I read through the lawsuit, and my first thought was this. Since Adam Smith wrote The Wealth of Nations, competition has been a very, very important part of capitalism, okay? And ever since The Wealth of Nations, and ever since we've embraced capitalist economic philosophy, the elimination of competition has been a goal at every corporation that has ever been created. Figure out what the competition is doing, better that competition, better that product, enhance what they're doing. I mean, competition drives price. So I'm looking at this, and even though I do not agree with the logic behind it, behind what they're saying now, what they are saying about Instagram and WhatsApp specifically does create a monopoly power for Facebook, on which other competitors cannot even compete in that environment, which means Facebook can price fix. That is anti-capitalism. My problem with this entire situation is this. Why approve the Facebook Instagram acquisition? That has to get FTC and SEC approval. Why approve it in the first place? And then this looks like a massive revisionist history because the political operatives simply hate Facebook. And this does feel like, and I'm going to take James' words there because I do agree with it, this does feel like an attack on capitalism to a certain extent. And it does feel like a little bit of revisionist history. And I do feel like there's some political punditry here that would not exist, but Facebook is hated by literally everybody. Whether or not they succeed on the lawsuit is a secondary question. But my concern is enhanced now because they are attacking Facebook in a level of which they haven't in the past. And that lawsuit was fairly accurate in describing exactly how Facebook goes about the elimination of competition. Now, whether or not they can get a federal judge to agree with that, that's a different discussion. But it's a fascinating conversation happening on Facebook right now. I can tell you that.
Mm-hmm.
And I go back and forth because there are certain things I dislike about what Facebook has. And I dislike the idea of monopolies. Absolutely dislike the idea of monopolies. But like the elimination of competition in capitalism is as normal as like any like price goes at supply and demand. Like it's part of the philosophy. So
it's an entire business model in Silicon Valley is to build a product or a business or service that Apple or somebody's going to want to buy. I mean,
well, and the
acquire.
acquisition model, Tim.
Yeah.
The acquisition model is nothing new.
No.
There's nothing new that Facebook did with WhatsApp or with Instagram. And again, I'm not saying they should have stopped the deals. That's not what I'm saying. I'm saying, why would they approve it and then have a revisionist history when nothing really has changed in that capacity from 2012 until today with how they have it been going about with their merger and acquisition?
Let's call it like it is. Exactly what you said. It's the social capital around Facebook.
It's
the right,
the social
the left,
capital.
the center, everybody kind of hates Facebook, you know, and yet here I am and I kind of like Facebook, especially lately. Our little Facebook group.
I like our little Facebook group.
Oh.
I do like our little Facebook group. I enjoy going over there, but it's just from an investor perspective, don't you got to be a little concerned here? I mean, again, I don't foresee a breakup here. I know other people have been talking about a breakup of Instagram. In one of our weird predictions from a couple of years ago, I said, Facebook would roll off Instagram. They never did. I don't anticipate that, but there are people talking about it.
Mark, what are your thoughts there? I mean, is there fire here where there's smoke? What are your thoughts?
I don't know. Like, I don't have any plays on Facebook. I don't have most of the big tech companies. I'm not doing anything right now. So, like, there's only so much news to absorb, and these headlines, and it does catch my attention that Matt says he's a little more concerned because normally Matt in these things over the last several years have been like, listen, we've seen this before, and so. The fact that Matt brings that up, that he's more concerned, does make me less likely to do something on Facebook.
That is the number of states.
I am specifically more concerned about the quite frankly, and I'm just gonna put it blunt, the actual quality of the legal work behind the FTC for one time in a very, very many times. I think the FTC did quality work from a legal perspective, and the brief that the FTC filed is very, very, very detailed. Everything was just like before, Mark, they were throwing grenades. Now they got a little bit of an assassin mentality. We'll see where it plays out. And again, I'm not trying to like play Chicken Little here. My concern is slightly increased. I'm not overtly like, oh my goodness, run for the hills, not in any capacity. I was literally to the point for the last 5 years, I could care less what the government does with Facebook because Facebook's always going to be in front of the government. I still think that's the analysis, but I do have slightly more concern now because they got a target on their back and they got some headhunters going at it.
Pretty big target. Tyler, when you hear news like this, does it affect anything the way that you trade? I know you're a pure technician. I mean, in fact, you rely on that a lot of times. If you saw a signal on Facebook, knowing that there is this thing going on, do you kind of skip it and find something else? I mean, do you change any of your approach? Would you take, simpler question, would you take a great trade on Facebook if it developed in the next 2 weeks?
Yes.
Yeah.
Because you don't know if something will come about because of this news and when something will come about because of this news.
Then let me ask you it a different way. If you're looking at Facebook or a similar trade and you were only going to take one, would this type of news stop you from Facebook and take the other trade?
Yes. Yeah. Same setup, two different stocks. One has a stink about it or something that could happen. Sure. Definitely. I agree with that logic. Yes.
Yeah.
Mm-hmm, mm-hmm. And that makes a lot of sense.
And I think that's where I am on Facebook, right? I think on a breakout on Facebook, you take the trade, But if now at this point with some dark clouds forming, not here yet, but with some dark clouds forming in an equal situation between Facebook and name your other company on a breakout, I'd probably take the other company in a tiebreaker.
Well, and the reality is, if there are a lot, all the big cap tech stocks look like this. So if Facebook's going to pop towards 290 and have a nice upside breakout, so is Apple, so is Nvidia, so is Amazon. I mean, they all look like this. So you'll have your pick of the litter at that point.
Yep, agreed.
Absolutely.
Yeah, like for example, take the Facebook breakout or the Nvidia breakout. Which one would you take? They're very similar. So you got the Nvidia breakout of 550, let's call that, right?
Yeah.
Or the Facebook breakout of, we'll give it 287. So,
no, I'd take Nvidia.
Take Nvidia, right?
Yeah.
So I think that's where you're at on Facebook right now. The concern is enough that you would take a different trade in the same environment.
Mm-hmm.
Correct.
Mm-hmm. That makes sense. A couple other quick ones for me here, guys. Then I do want to do a naked put kind of example on AMD that Mark brought up in pre-production. I think is interesting. We'll have some analysis for that. But real quick, Pfizer here, PFE, and we've had vaccine development all year long. We're now assuming and seeing this thing making progress. We know the vaccine's now in place in the UK and Europe. Pfizer might get approval here today for the US vaccine. Mark, I got a simple question for you. I asked it to you before. I'll ask it to you again right now, though. Does this have any market implication to you?
I don't think so. Like, I really do. And we don't love the term priced in, but I think that the reality that we're going to have a vaccine right now is priced in. I think it's reality in market participants' minds. So you get a little news, you get a little news here. Like, I still think on like mass rollout, I think there's a big algo day there, but that could happen February, March. I don't know when that would happen, but I think it's a reality.
Mm-hmm, mm-hmm. It's going to be interesting, see what happens here over the next little bit. Obviously, we've been talking about this story as well for quite some time. Markets are not moving out in the short term, so let's move on. Tesla, though, I did. Oh, God, I got to tell you, I find this guy at JP Morgan, Ryan Brinkman, we've talked about him in the past, to be just a very stubborn individual who's resolute with his opinion, and he's not changing it, and it doesn't matter what happens with Tesla. Tesla here, TSLA, he reiterated his price target at $90, slapped saying that the stock price is 1,325 times its long-term PE multiple, 291 times its 2020 estimate, and he's basically screaming at the top of his lungs that this stock is inflated in a bubble and crazy here. Matt, do you admire the man for sticking to his guns here in the face of Tesla running to $600?
Like many times in the market, he's right and yet he's wrong. He's right on the analysis. He's wrong on the impact on Tesla. Tesla's in a bubble. Tesla is a bubble. Tesla's treated like an index that represents the entire ESG movement. And so I think what a lot of people struggle with Tesla is they look at the underlying fundamentals of Tesla. They look at some of their questionable, and I say that with quotations, accounting practices, and they're like, how in the world is this company, based on these metrics, based on everything we have ever learned from a fundamental, a behavioral, an economic analysis perspective, you name it, right? You name it. How in the world is this company up? And I think specifically on Tesla, I don't think a lot of people understand what Tesla represents. I agree with him on the analysis. There is no fundamental justification of why Tesla has the market cap that it does. But when you're talking about Tesla, you know what type of analysis you have to take into account? What the nation of Singapore does from a digital and a physical infrastructure perspective, given the fact that they want to have a clean tech environment by 2025. The same thing in Hong Kong. The same thing in many areas of the Asian economies. You're seeing the ESG movement happening. And so when you're looking at Tesla and you're breaking it down from a price action, from a fundamental perspective, from a market cap perspective, the only conclusion you can come with is this is a bubble of metric proportions, and they're right, but they're wrong in the fact that that's not how people see Tesla as a poster child for the ESG movement. So how does that get fixed along the way? I don't know. I don't know. But the way I approach Tesla is technicals, because that's the only way I think you can approach Tesla.
Tyler,
This thing is treated like an index for the entire ESG movement.
it's so crazy when you think about it like that, but you know, it's true though. It is the poster child, no question asked. Tyler, what are you seeing in the technicals, you know, from that perspective?
Dude, these candles the last couple of days have made it rough. I mean, volatility is already sky high, but it's increased over the last 2 days. We had a nice little breakout, but look, this went from 654 yesterday's high, today's low. It dropped $100 in 2 days. That's a lot of volatility. I think that the last 2 days it's a microcosm of what you've seen for the last forever in Tesla, but it just goes to show that it is a trickier stock to short-term trade if you're not equipped with the emotions and the techniques to be able to manage the higher volatility. I mean, it's a whippy 2 days, but you got to be impressed how quickly they came and bought the dip. I mean, everything we said about the Qs or the NASDAQ when we kicked off the show is kind of applicable to Tesla. It looked nasty yesterday. It looked nasty this morning. And it's right back up.
I think you trade every breakout on Tesla until that breakout doesn't pay out.
Yeah, trade them.
And even when that doesn't pay out, I still think you trade every breakout on Tesla until you can't take it any longer. I think this is a breakout. This is a breakout stock. The dip mentalities and the retracement mentalities are completely non-existent outside of just the psychological buy the dip mentality, which is strong. And Tyler's absolutely correct there. But this is a breakout for me on every time frame. Like when you see a breakout, you take a breakout on Tesla. I think it's kind of like AMD. When you see a breakout on AMD, you take a breakout on AMD. You do it every time. It's going to work. Whatever, give it 50%, give it 60%, give it 65%. I don't even care what the probability factor is. You trade breakouts on AMD. You trade breakouts on Tesla until they fell.
I agree with that. By the way, from one company that's had some questionable accounting practices to another one who we know has had some questionable accounting practices. GE, real quick here, Tyler, and there's not a lot of in-depth analysis we need to do. The market is up today on this news headline that literally triggered me this morning. I had to just chill out there, Matt, have a little meditation moment. I got so upset about this. General Electric's paying a $200 million Securities and Exchange Commission fine, settling claims that it misled investors about problems in its insurance and power units. GE did not have to admit any wrongdoing in the agreement in the settlement, though. Talk about the proverbial slapping a company on the wrist.
Listen, what if our criminal justice system reflected our white-collar criminal justice system? I mean, where you literally never have to admit guilt, and the only thing you have to do is pay a fine, regardless of the economic pain you put on anybody else.
Yeah.
Oh man, it is good to be a corporation in whatever version of capitalism we're playing here. It's sad. It really is. It's sad that GE only pays a $200 million fine for all their accounting nonsense, which
costs investors billions and billions and billions. So let's be clear, it's disgusting. It's absolutely disgusting. But you know, the way the market works, market doesn't really care about my emotions around this or my feelings around this. GE is up to flat on the day, and it's like,
listen, this is stock market mechanics, though. The fine, like 200 million, then the stock and the investors like, yeah, it should have been bigger. Buy more stock.
Yep.
It's the sad underbelly of the market sometimes.
Yeah. Let's transition into the thing I've been excited for all day during this show. And actually, let's bring up AMD and let's talk about it. You know, we're going to move into our coach's corner now, where we talk about picks or setups or trading strategies, something, you know, on a regular basis, where we look at it, we analyze it, and we help you guys understand the way that we're approaching something so you can improve your skill sets and elevate your learning. I think you used that phrase there yesterday, Tyler. AMD is a stock mark that everybody trades. It's one of the most popular companies in the marketplace. I know it's a fan favorite amongst active traders, veteran traders, and new traders alike on a watch list perspective. But you love trading it for a different purpose, and you're not really a directional type of trader. You actually have a naked put on this stock. Is that right?
Yeah.
Okay. So kind of explain what your position is. And let's just start with the simple question. Why did you pick AMD to begin with?
All right. So, I mean, I'm going to walk you through the entire mindset, and you guys, I want you guys to push back whenever you have questions or you say that's dumb, whatever, right? And I'm going to walk you through the mindset of how I sell a naked put. Well, at least when it's not on garbage, high volatility, 8,000% IV on the monthly chain, then I just throw naked puts because whatever. But when I'm actually spending the 95% of my portfolio I care about, I walk through a process. All right. And so one of the things that it starts with is I want a company that I respect, a company I like, because when I sell naked puts, I don't do them as trades. I do them as the start of a cost average down plan if things go wrong. So I start with the fundamentals. AMD obviously has had a lot of great progress. I mean, go look at Intel's chart and I'll let you know the fundamentals of AMD because they're taking market share. I believe in this company. I mean, they're doing great things from a visionary standpoint, capturing market share and so forth. And, that's been reflective in price for a long time. All right. So, but, when I look to invest, I usually want to get a reasonable price or at least relatively reasonable, especially when I start a cost average down plan. So that starts the analysis as far as why I select AMD. But there's other tech companies I like, too, right? So it's like AMD's not the only great tech company. And AMD has had a little bit of oomph compared to tech as a whole. There's been a little bit of outperformance in recent weeks. I mean, go look at NVIDIA, go look at all these charts. They look like they're stuck in quicksand right now in these long-term ranges where just momentum has died, volatility has died. I don't have that momentum because one thing I like to do as a cash flow trader, I like to piggyback off you momentum traders all the time. And so I like signals that are breaking out. I like signals that have a little umph. And so AMD separates from some other great tech companies because there's lots of great tech companies, right? I mean, but you can't own them all. So that kind of is why I selected AMD from a fundamental relative strength. Now let's get down to the technicals and let's go to weekly chart. Now, usually when I do my technical analysis on a naked put, I do it on a weekly basis. I'm not a swing trader. Swings can change a lot. Swings can change a lot in the matter of weeks. And normally I'm selling 35, 45, 60 days out, just depending. And so a lot of short-term things can change in that time period. So I want to do my technical analysis from a weekly chart when I'm selling naked puts. Now, the first thing I look for is I look for a strong horizontal support level. So take off the moving averages for a second. We're going to add those in a minute, but I want to look at just good. You remove my 9 alone. Oh, you dirty, dirty, dirty man. So I want to look at a recent short-term support level, and I want to have 3, 4, 5 tests on the weekly chart. Ideally, not in a row, but spread out over a couple of different months or a couple of different time intervals. And I have that on AMD. I have a really strong support level in the 74-ish range where we came down in 2 different time periods. And when I look at these two different time periods, because I analyze the market, I know what these time periods also were. One was in the heat of election risk, where things were worried, selling off on the broad market, and on the technical shakeout where everything was getting bloodied. AMD stuck that support level even in high volatile market environments. That adds from a qualitative standpoint some extra strength. Now, I don't need the qualitative analysis. Let's say I didn't know this company at all, or I'd taken the last 2 months off of trading. I would look and I'd be like, wow, that support level, the bears had plenty of chances to send that lower. They had a chance to send it lower 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, failed every time. So they had plenty of chances. And when the bears have plenty of chances to fail and they keep failing, usually one direction for it to go in the short term, that's up. That's what's happened to AMD. All right, so I got a support level there. I also now have a secondary support level in old resistance becoming new support. I had a very clear horizontal on the weekly that stands out. Resistance level in which price broke. Now, I ignore wicks as a general rule in this analysis. It's to wick or not to wick. That's the eternal question.
Mhm.
I ignore that and I give this credence as a bona fide support level. So right now I have two potential support levels, a rock level support level at 74-ish and an old resistance level that could act as new support. All right, so there's 1, 2. Now let's put on those weekly moving averages again.
I got a question before. Yeah, exactly. Bring the moving averages back up if we can, because I have a question on that. So when you are traditionally a very much a moving average guy, and you had Tyler remove the moving averages for identification of support. I'm guessing you did that just to teach that to the audience, I'm sure, right?
Well, I do, but I also start my analysis on a clean chart without any indicators, because I want to see where those horizontal resistance levels are. I want to see the cleanness of the pattern before I do other secondary indicators. Now, for me, moving averages are very primary, but for most people, they're secondary. And so like when I'm teaching and when I'm doing these things, not everyone is going to be the moving average just there. That's right, Pico. I like it. All right. So I got two potential support levels working with me. Now, I also have two rising moving averages, one in my girlfriend, the 9, and two on that second most underrated indicator in technical analysis, the 20. Now, we see the last time it came down to the 20, just a few weeks ago, 5, 6 weeks ago, we had a hard stick and a bounce. Right now, it coincided with everything going up. So I don't give that a lot of credences, but I do. I see it bounce off the 20 a lot. So when I look at this now, I'm right. All right. I now have 4 potential support levels that I give credence to. Old support, which is the basis, the number 1, that's 74 level. The old resistance that can act as new support. And then for fun, I got some rising moving averages as well. And so I got 4 layers for this to come down. Now, I also, and we've talked about it at the start of the show, I also look at the market as a whole. And remember at the start, I was like, well, tech as a whole also has support levels, lots of support levels. Like, so if you go to the Qs, I also have a lot of things in which the broad market in a fairly similar pattern has to get through. So if the market, because once again, if the market crashes, well, then a lot of my trades are going to go along with it, right? It's really hard to swim upstream, which is why you better want to own it long term, because every once in a while something happens in which you do own that stock. But on the broad market, I also got all kinds of crap for it to get through as well. And so I got support levels. I don't have a bearish theme that scares me right now. I got all kinds of support levels on the broad market. Now going back to AMD, I have all kinds of support levels that it has to get to. All right, so I love the chart from a naked put ownership cash flow perspective. Now the question is, all right, where do I sell the naked put? The technicals all line up. I got multiple support levels. I got a rock hard support level that I trust at a price I'm comfortable with at around 74. I got broad market analysis that I'm skewed very bullish on, especially from a cash flow perspective. Now, all right, so I love it. Check, 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 check everywhere. Now, where do I sell my naked put for ownership? Now, traditionally, what I like to do is sell a naked put above the bottom support level that I believe in, which is at around 74. And so I love to sell that above that support level, because I want, in an ideal, I call it the sweet spot for naked put selling. I love it. Doesn't happen very often because most of the time they just expire worthless because you do all of this analysis, right? And you're like, get these really great setups and these really great opportunities, and the stuff just expires worthless.
Mhm.
But when I get put something, I want it to be above that support level, because if I get put the shares and the support level holds, man, I'm in a really good spot in that situation. That's a really good situation to get put the shares. And so I want to sell that naked put above the support level. Now, someone really aggressive could sell it at 90 or whatever, or just buy shares, whatever. I don't know, but this is how I do it. And so now I'm looking at, all right, so let's go out and let's find a strike level that makes sense to me. And so I look at, and let's go to the trade tab now. Let's go to the trade tab now. And so I know that $75 level is what I'm judging as support.
Well, before we get to that strike part of it, so you'd go through this process where you're reading the chart, AMD's on your watch list, you evaluated all those levels, you know where your key support is, you've got a thesis behind it. That was very insightful, by the way, and I think our audience is agreeing. I'm seeing some nice comments here. So a lot of good stuff there, Mark. But then you come into the option chain. What is your next choice? Because
well, first of all, I want to look out before I look at strike prices, I'm going to look at the time period available. Now, I personally love selling in the 40-ish range, anywhere from 41 to 49 days. Sometimes I'll go into the 50s, sometimes I'll go into the 30s. I don't really like going too far out in time because I want to do this every month, right? I want to do it in January, then I want to do it in February, and then I want to do it whenever, if that option is available to me.
Tyler, I want to ask Tyler a question on that real quick. Tyler, come on in here. What is your preferred time till expiration based on back testing, also 15 years of trading? I know you know the answer to this for yourself, but also just for most people, when do you like to sell?
So 45 days is the sweet spot. I usually teach 30 to 60 days. So that would be right in line with Mark's commentary.
Right in line with the way that you do it as well. Okay,
Yep.
Go ahead. All right, good. Go ahead, Mark.
It's almost like it's the math, right, Tyler? It's like that where that theta curve starts to decay. I mean, it's like, you can sell weeklies, but there's that spot in the chart in that 40-ish range where you've just done it enough and you say like, yeah, this is when it really starts to decay.
Yeah.
And so right now, looking out at January, like 36 days is still plenty of time, right? And so like looking at 36 days, I know I still am in a really nice spot in the theta decay curve. Got 5 weeks till expiration. And so I look out and I do that spot check of the premiums just visually. And I know, because if I was only at this point now being like, oh, I'm only getting $20 or $30 for a 77.50 or an 80, I'd be like, no, I'm not going to tie up the margin. I'm not going to get that annualized return on my money that I'm comfortable with. And so this part of it is very visual. I don't have a mathematical formula, but I look at this check and I'm like, oh, I'm getting 110 or 160. Okay, that's perfectly fine. I know just from experience that my annualized ROI is going to be acceptable according to my standards. All right. And so
yeah, but why 77.50? That's really, I mean, as we're looking at this and thinking through it and talking about it, it'd be the only question so far that I would have, because based on your logic, 74 is your support, 75 gives you more cushion. You're a low delta guy. You could have still picked up $75 at the 75 strike. I know you got more money at 77.
I want ownership.
You want the stock.
Once again, I'm not doing this as a trade. I could find all kinds of things to just sell naked put on a trade, but I do not teach selling naked puts on a trade. I know as Tackle Trading, we are very against naked put as trade. Naked puts are an amazing vehicle for investors. They're an amazing vehicle when you actually want the shares. They are a terrible vehicle that is misused, in my opinion, for individuals just trying to make some quick money. And so not a huge fan of trading. And so because I want the ownership, because that support level is there, man, that's the perfect spot. It comes down, I get put, the support level holds, I get it at a great spot, and then I can start selling calls and maybe out of the money calls quite a bit and get some price appreciation on the support bounce like we've had a couple of times. And so now I'm looking at strike prices above support. I got 77.50 and 80. Because I am in a potential breakout scenario, and I choose in this trade the 80. Now that's a little aggressive for me, and you're like, it's a little aggressive for you. It is for me. It's very aggressive, but the reason I'm going a little more aggressive at the 80, aside from the 77.50, is one, that 20 weekly is above $80. So I know there's a good chance that is going to act as a buffer, if nothing else, in if price were to start going down. I'm very bullish on the market from a cash flow perspective. I don't have, on the broad market as a whole, don't have a bearish theme that's scaring me. I don't have like things that are worrying me. And so because of the technical analysis, and I got so many ways to make that money. I mean, if the old resistance level acts as new support at around where is it at? Around 87, game over. If the 20-day moving average catches it and AMD goes up in price, game over. I mean, it's just going to clear. If the broad market just stabilizes, like there's so many ways right now where price just trades sideways at a minimum on the broad market and in AMD. It just makes me feel more aggressive. A+ technical scenario, lots of support levels. And so I'm just a little more aggressive, not a whole bunch, right? I could go up to 82.50. I could go up to 85. There's lots of things I could do to be really aggressive, but just a little more aggressive for me to get a price above a support level, knowing that unless the market just slides, it's just going to expire worthless. But that's the logic of everything that I go in right now on this particular trade. Why that strike price? Why that expiration month? Why this individual stock? So
Tyler, thoughts? Is there anything you would do differently here? Do you agree with Mark? What are your thoughts?
I don't know if we want to go down this. He feels a little stronger about not using naked puts for shorter term trades than I do. I don't mind using for shorter term trades.
Let's go down it, brother. Let's go. Let's open Pandora's box. I got no problem with that. Let's have a discussion.
Okay.
So you would go higher strike is what I'm guessing.
Well, philosophically, he seems a little bit more adamant about naked puts are an investor vehicle for wanting to acquire shares. I don't want to use it, as a short-term trader, which that could be maybe for a specific situation where he sees, people do it wrong. I'm less closed-minded. I'm more willing to sell puts for shorter-term trades because I use them just as a substitute to stock. That would be the only minor quibble. Everything else was great. I love the process and I love his logic.
So because of the willingness to take on a little bit more risk for yourself, Tyler, you go higher delta, pick up a little bit more premium and play that a little bit more aggressively. Mark would stay at the lower delta, make sure that he's got cushion. Now, by the way, this is still an 18 delta, Mark. I think a lot of times you probably even look for deeper than this. So for you, I'm guessing this feels a little bit aggressive to you, is it?
Yeah, well, yeah, I mean, for me, it is aggressive, but it's only because of the quality of the setup that gives me that confidence in being more aggressive. Because when I take ownership, and I got if someone wants to trade, that's their own risk parameters. I just see people screw it up all the time. So I've become hypersensitive to people that are greedy, right? They sell 10 naked puts. They don't actually have the capital. They get over leveraged. I mean, it's all these things. So I'm just extra cautious in that aspect. But for me, when I'm looking to take ownership, I want the cheaper, the better for the long term, right? Hey, I'd love to get AMD at 67.50, right? Great. But I just think that the quality of the setup for me has me pushing it a little bit.
I love it, brother. I love the way that you've designed this and thought through the process. And I think one of the keys for me, and this is what I would do with a newer trader. Obviously, you're a veteran trader with 15 years experience, but I would always question their logic just to figure out, okay, have you really thought through if you're going to take assignment, what you're going to do with that and all those type of things. Back on the chart for 1 second, Ty, I do have one question for Mark. So Mark, if you do get assignment, as 77.50, 80, whatever strike you end up with. And which one was it specifically? Did you finalize?
$80.
The 80 strike. So you get assignment at 80 and it breaks the 75 support. Are you writing calls in a long-term fashion boomerang style to recover? Are you hedging? Like what is from a boomerang perspective mentally at this point? You probably won't have to deal with this, but I know
you occasionally do.
I know you already have thought through this, right? So
Mhm.
how do you handle that?
Okay, there's what I call the proverbial line in the sand. Now, as a normal rule, and this is just Mark Justice specific, I normally don't hedge when support breaks unless it is the only or the last 100 shares that I'm going to own. So like if I'm only going to own 100 shares of AMD, yes, I'm absolutely going to hedge that. I'm going to buy protection. I'm going to take a small loss and then try to sell out of the money calls to protect, reduce the cost of the hedge, and take it that way. So if that's my only 100 shares or the last 100 shares when I'm teaching Boomerang, because there's a line where you just can't or don't want to own anymore. And so when that happens, then you need to have on that last 100 shares, because stocks do go down. I mean, pull up ADS. I want to give ADS.
Well, before we move past AMD to ADS, Matt, any thoughts on this AMD setup and trade and conversation?
In terms of the management, that Tim, if you get assigned, you just go to your covered call management system, right? I mean, and when you're in covered calls, the decisions are when to write the call and when to manage the call, right? When to protect. So I don't know if it's healthy for us to get into that covered call management discussion here today, because quite frankly, that is a multi-hour discussion.
That's a class. Yeah.
That's a class.
And
That's
it's great.
what it is.
And we do teach covered calls all the time at Tackle Trading. Seriously, this is the kind of stuff we do for pro members in our shows all the time. If you're not a pro member, go to the store tab, sign up for a 15-day trial, be part of this awesome community, or you can email me at team@Tackle Trading and I'll get you set up.
He stole my pitch, Tim.
He did. He
stole my pitch.
Well, he's feeling long and strong.
He must be like.
What was the other thing Tyler had? Like it's moving, but I don't know what it was. I gotta go revisit.
It was moving and grooving, Mark. It was moving and grooving, buddy.
I had it all dialed in though, T. I was like, yeah, that's a multi-hour class, and we do have one of those called the Tackle 25. You can go get that over there at tackletrain.com. Mark's like, nope, I got this, Matt. We're rocking and rolling. But no, that is a educational type conversation. But no, the conversation I really, really like here is what strike price, right? Because that's a debate we always have when we're doing bull puts, when we're doing naked puts. Now, obviously, the bull put is a little bit different. In a bull put, I want to sell underneath support, let that support fight for me.
Yes.
The naked put, I want to sell above support to, if we do have to get put up, we have support fighting for us when we own the equity, right?
Yep.
So there is a little bit of a different makeup there, but I love the conversation on 77.5 and 80, and it might not seem like a big deal, but when you're dealing with a 19 delta and a 14 delta, you got a probability difference there. And when in down, I said this in chat though, when you're looking at AMD and you're saying, okay, I want to take possession, or whether you want to take possession or you just want to cash flow or you're willing to do Boomerang, it doesn't really matter to me. But you're willing to do a naked put, which means you obviously have to have an intention of taking possession of it, or you should never write a naked put. Well, that first starts with at what level, right? Because Mark approaches this a little bit of a technical decision, but he also approaches it a little bit of a value decision as well. At what level am I comfortable taking that ownership? You have to answer that question. Now, whether you answer that question from a fundamental price point perspective or whether you answer that question from a technical price point perspective is up to the actual individual. Here, Mark says AMD, a company I like, a company I want to own, a company that I've had a lot of experience with. It is good to see you now on the AMD bandwagon instead of the Micron bandwagon, Mark. Congratulations for finally graduating into the AMD analysis.
When Micron goes back to $40, I'll get on the Micron back.
I know.
Micron, go to MU.
We got a nice little Airbnb chart there, but
Micron's acting like AMD right now, and I don't like it.
Micron's acting like AMD should be acting.
So
Micron's been a juggernaut. No, but let me finish my point very quickly. So when you're talking about that, the thing that I really like getting into is the conversation of 77.5 versus 80. If you're in doubt there, just take the higher probability. Always make that choice in a cash flow, in my opinion. And again, this is just my opinion based on my experience. But typically, whenever I made a decision to write a lower delta, versus anytime I've made a decision to write a higher delta, I've usually regretted writing the higher delta, and I've usually been happy with writing the lower delta. So take a little bit, when you're a new trader, you look at the ROI potential on the cash flow system. You're like, wow, I can get 10% in a month on ROI on AMD. Oh my goodness, that is amazing. Let's just load up on that. Let's do the 20 delta, take an 80% probability, get 12% ROI. It's absolutely fantastic. Well, yeah, that's fantastic, but it also can't work long term. So in terms of that, always take the lower delta. That's the only thing I'll add to it.
Love it. Any last thoughts, Mark? I know you had brought up ADS, but now Airbnb's live, and my entire attention has changed.
Yeah, no, I mean, it's just have my last thought on it all is like, that was all the everything goes well, blah, blah, plan. You never want one trade to ruin your day. And you never want one trade. Just have a plan that if you do get put the shares or a support level breaks that you were anticipating hold, what is your plan? Just have that plan laid out.
Absolutely. Airbnb's finally getting some pricing here, Tyler. It's a fire. I guess you could get the popcorn out and watch it. I'll taste.
Oh my
it's going to
God.
be interesting. It's like, oh my.
Yeah, I don't know what you're going to do with it. I mean, it
looks like the same candle of DoorDash
It
yesterday.
does.
Like
Yep.
the exact same thing. I mean,
listen.
replace the name. Who even cares about it? Like, there's no way Airbnb is a 93 billion market cap company. Get out of here with that nonsense. There's no way DoorDash is a $40 billion company. That's just utter nonsense.
I can't help but think back it was just a few months ago where the Airbnb CEO was on CNBC, and he was like talking about how the industry never going to recover. It's been permanently changed. Listen, none of this ends well one day.
This was literally 2 months ago. Like 6 months ago, they had to pull their IPO because it was going to be like 12 billion. This is insanity, flat out insanity. And congratulations if you make money. I'm cheering you on. I like people making money in the markets, but not my cup of tea. Let's just put it like that.
Not my cup of tea either.
It's entertainment for me until
It
I
is
get
entertaining.
That's what it is for me personally.
Botainment.
Yeah, that's right. All right, guys. That's all I've got for the show here today. We're about
I
approaching the end of it.
I kind of have that same question Dennis has. Who bought the 165 tick? Who feels bad today? Like, who feels like the ultimate bag holder right now?
Somebody did.
Somebody did.
We know that somebody
bought the tick.
Tyler, final thoughts, my friend.
I love Mark's walkthrough on the naked put thing. One of the things that I love most about that strategy is perhaps the most common complaint with swing trading is I get whipped out of trades. I buy high and I sell low again and again and again because I get knocked out when the market goes down. What Mark's system effectively accomplishes is he's buying weakness and it gives him the opportunity to sell strength. He's using all sorts of powerful techniques to put the odds in his favor. And that is the mark of somebody who's been, no pun intended, Mark, that is the mark of somebody who's been through the ringer and understands and has arrived at a conclusion where they understand their personality, they understand the trade-offs, they've internalized everything about their system. And that's why he's able to execute the same thing again and again and again and really use the markets to his advantage. I think it's a perfect example of that.
Mm-hmm. Yeah, I agree.
And that, by the way, I am now back in his good graces after yesterday's girlfriend knock. Mark, I love you, buddy.
Listen, Tim starts off with all that crap about my magnanimous Mark, and you're kissing my ass. This is all. I'm dying today. I know, like, I'm gonna get hit in the street, and the car's gonna kill me. I know this is my last day on earth.
I do miss, and I want to get it back to it at some point, the things Mark hates, discussion. Not today. We're in too good of a mood, but things Mark hates, I enjoy that because you can complain about all the companies that you don't like and all that kind of stuff. Maybe a podcast conversation there. Marky, final thoughts from you, sir.
I don't feel good. Like, just be careful out there. Like, people take COVID and all that, different risks. My ex-wife has COVID. She tested positive. I don't feel very good today. Haven't felt good for a few days. Just be careful out there. Wash your hands. Be careful. Yesterday we had more people die of COVID than any day yet. And it's real out there, right? whether the severity of that, I don't want to get into a debate. We've all seen the different arguments, but just you out there, just be careful, wash your hands, be careful, and hug your loved ones close.
Mm-hmm. Mm-hmm. Maddie.
Final thoughts?
Mm-hmm.
No, no final thoughts of what Mark said. Well said. Hug your family. Enjoy your day. Love life. Love each other. Treat each other good and kind and generous, and realize we're all fighting this battle of getting better and trying to find perfection for everybody over time.
Mm-hmm. I think I got nothing to add to either of those two statements. Appreciate the thoughts there, Mark, and obviously I get feeling better.
Yeah, thoughts and prayers though, Mark. I went through that COVID scare last week, and obviously our thoughts are with you right now.
That's right.
But like Tanner says, Tim, I know you're trying to close up shop here, but you do have a McRib, so
there is that.
Yeah, and they don't even, and nothing tastes good right now. This is not good. The freezer
Mark,
is getting put to good use. I'm just saying.
I got some things that some people might find offensive on the McRib and lack of taste. I'm going to keep those thoughts to myself.
I see the joke.
It was an easy joke.
It was an easy one. It was an easy one, but not today. We'll leave the McRib as just its glory that it is. All right, guys, we're done here for today on a Thursday, 12/10/2020. Tomorrow, we always got Coach Frank coming in here. We're looking forward to that. As always, have a wonderful day. We got Cash Flow Club tonight, 8:30 p.m. Eastern. And just like Mark talked about, there's a 15-day trial link in the description, in the comments below every one of our videos. And our promotion is still running. Step System is still on sale, 50% off. The Annual Pro is on sale on a discount. You can get them as a bundle. All of that information is on our store page over at Tackle Trading. Guys, we're done for today. We'll see everybody.